Everyone in the pit hear me and see my screen okay? Good morning, Renee. Adrian, how are you? Ooh la la. En France. On vacation, I presume, or? Okay, well, let me open my door here. It's a little hot. All right. Keith B, how you doing? All right, well, my name's Bozier Parsons, or Bo if you like, or Bozo if you're from Chicago and you used to grow up watching the Bozo show and dream about dropping that ping pong ball in the little buckets. Actually, I've heard them all, so if you can come up with any new ones, you're welcome to try. You won't offend. Nice. That sounds awesome. Cycling in the Pyrenees. I love it. So just, here to kind of go over the way I like to look at the markets and trade, and maybe get into some trades and discuss some different ideas about how you can look at things. Let me know any questions you have. I'm going to post my level sheets here for CL, ES, and NQ. Let's see. I think I have to turn them into PNGs. So let me do that real quick. So a little bit about my background. I know I've been through this sometimes with some of you, or if you've watched before, you may have heard a little, but basically, I started trading in late 2007. Actually took my Series 7 and well, actually what really happened was I got divorced, lost my house, lost my job in 2008, had a young 3-year-old daughter, and basically didn't know what I was going to do for work. And I decided that I would follow in my father's footsteps, and I told him I was going to become a trader and that I was going to take the Series 7 and pass the test. And I studied for a little bit, passed the test. I can't remember what I got, 80 something, 83 maybe. Or I went to work starting trading with Bright Trading, which is a sort of an OG prop firm from back in the day where we were trading stocks. My dad was already trading there because he was a floor trader in Chicago on the CBOE and the OEX pit, which is the S&P 100. He actually started down there when the CBO he opened. He bought a seat, bought two seats actually, and he leased one out and traded on the other with his own account, his own money in the pits as a local. And eventually retired. He was in the pit for about 25 years and finally retired, but made it back to screen trading through his friends Bob and Don Bright and Bright Trading, and then that's where I started trading stocks with him. And after a while of fighting through the changing markets and the algos and the HFTs and everything, he was done. He was not making money anymore, and he was frustrated. And for several years, was really just trading for me as a mentor and helping me out and stuff. So I continued on with it for a while, and I struggled in and out of consistency and all that kind of stuff. Eventually, got a job selling insulation, and I sold insulation for 12 years. But only after about 2 years, I decided to start trading futures. So I started that in about, I can't remember, 2014. I think I started trading futures. Don't really trade stocks too much anymore, a little bit here and there in my like retirement account and stuff. But I always thought that the futures were more of a little bit of a level playing field, especially what we came through with the HFTs and the changing markets. We went from, there were times we were battling, like broker dealers having the ability to do sub penny orders where the rest of us couldn't. And then of course all the different exchanges and the speed elements of co-location services and algos and all that stuff, which I'm sure most of you have read. But if you haven't read Flash Boys by Michael Lewis, it's a really interesting and good kind of generalized overview of some of how the electronic age or the electronic trading age really sort of changed and altered everything towards speed, right? And so speed now is almost like it's almost like everything really is supercharged in terms of how quickly things get priced in. And so that's partly what I like to do in terms of trading on a short time frame. So I use a 1 minute time frame for my main execution, with my 15-minute as my larger time frame, and obviously up from there, like you definitely want to pay attention to the larger time frames. But it's a part of it is because you really want to pay attention to just the price action. The news is news. It'll come out sometimes when you expect, based on the calendar. And as we know with the wartime here, like it comes out all the time when you don't expect it, and they price stuff in immediately. And then we have to react to how the price reacts. And so I'm the type of trader that watches and reacts to that more so throughout the day, versus coming in and having a preset plan of this is how I'm going to trade today. This is exactly what I'm looking for. Like occasionally I have a good feeling for that, but otherwise I like to see how the trade unfolds. Okay. So with that said, what you're looking at here is my main screen for the futures. I watch the RTY, the YM here, NQ, ES, and CL. Those are all, right now I've got them on daily charts, and I'll flip them to 15-minute charts. And then here I have NQ and ES on the 1 minute chart. And so those are a lot of what I'm looking at. The first thing I like to do in the morning is come in here and just adjust what I've been using as a 5-day ATR box that shows me the potential range of where the trades can possibly trade to. Um, so right now on RTY, it's 47.4, 586 for YM. So let me show you how I set this up in the morning. So the yellow box is what I set up as a 5-day ATR range, and I just make sure that the range covers the value. So if we go, what did I say it was? Let's go back here for a second. Oops. Futures, daily. Can't even remember now. Okay, 47.4. So let's go 2997.4 and 2950. Okay, so that yellow box represents the range, the 5-day ATR range. Then what I do is I come over here and I center it on the closing print of the Globex session. And it just gives me an idea of how far things have moved in the overnight and whether or not they've fulfilled their ATR range. Okay, this orange line here is the RTH open. So once we open in a minute or so, I'll update that to correspond. And then we'll do the same thing for the rest of these charts. So yesterday it was 586 on the YM. $52, 586. And you can see, like, even though that was adjusted slightly, you can see that oftentimes we get these price moves very precisely to the ATR fulfillment. So that's partly why I started using them. I also just liked the idea of being able to drag the box up and down quickly to kind of get a visual representation of where that price might go, right? And we'll get into that a little bit here as we trade. All right, so on the NQ, currently have a 5-day ATR of 659.25. Okay. On the ES, it is currently 79.5. Pretty good range, right, for summertime trade. It's been awesome trading. I mean, I know we can go into some quiet periods here, but this is the best summer trading that I've ever been around. Okay, I'm going to come back and we can update this opening price right now. So open was 75.26 on the ES. And then in the CL, current 5-day ATR is $3.52. And one of the reasons I don't mind doing this now after the market's open even is like one of the biggest things emotionally that happens to me is feeling anxious about getting into trades. And so part of what I decided with doing this stuff was I don't really want to be in a hurry to get into a trade. I trade better personally when I kind of watch things unfold and have a sense for where I want to be, what side of the market I want to be on, and stuff like that. And so having this kind of activity to do helps me just sort of relax, get through some of my activity here, let things open and kind of start showing their cards to us. And in the meantime, if we miss a good entry, hey, we miss a good entry. This is not my setup, is to just come out of the gate and start pounding. Occasionally, like I said, I have a good idea about maybe taking a quick early trade, but then what happens is if I lose on that trade, it causes me to be emotional right out of the gate. And so I'm very cautious about that. I'd rather not be in that state of mind starting out the morning. Um, okay, we have these boxes centered on the Globex session closed, but this is what I wanted to show people was this is an easy way to quickly do a visual representation of, let's say the low of the day is in here in crude. You can put that box right there on the low overnight session low and look at how it's already basically fulfilled its 5-day ATR for the day. Okay. Now, what that can tell us is that it may have already used up a lot of energy in the overnight putting in that range. Now, that doesn't mean it's going to stop there. Like, what if it decides to go, straight up, for instance? Let's say it puts in a quick low here and then just goes bid the rest of the day. And this quick low was its RTH low of the day. You can zoom out of that and you can see, quickly where that next level could take you in terms of just price expansion, ATR expansion kind of thing. I don't necessarily expect that to happen. So for right now, I'm just putting this back like this. And I'm just in my brain thinking, yeah, I don't necessarily want to be long here on this breakout of crude. I mean, it might be the right trade, but I'd rather see it if we can pull back in, back to these kinds of highs. This was support for a little bit, then it broke down, became resistance. Now it's reclaimed, so that kind of thing. Let's get the rest of the opening prints open or updated. So in the NQ, we have an opening print of 29,222.5. In the RTY, open 29.6640, and I only very rarely I'll take a trade in RTY or YM, but I do like to have them up on my screen as a visual to just see if there's some rotation or some full risk on, risk off kind of price action going on. YM, we opened 52,256. That one looks correct. And the biggest thing that I'm seeing right now and have seen over the last week or so, consider what happened a week ago, yesterday, Monday. We had this big move up in bond rates where bonds were selling off. They reversed over the next few days, but now we're right back kind of retesting those high yields, and bonds have been very weak, and they're weak again this morning starting out of the gate. And we have to wonder at some point, does the market care again about that? Or does the market start to worry that if the bonds sort of price in these things ahead of the Fed, like in other words, if rates start going too high again, does Warsh have to come in and start his cutting cycle, his hiking cycle, sooner than everyone would like? And so the risk right now is, in my opinion, the risk is to the downside for the markets, just that do these higher rates actually matter at some point? And they may not, especially with cash-rich tech companies where the chase could still be on for owning assets to offset the potential for higher inflation. On the other hand, any companies that are over levered, or small caps maybe, could be more susceptible to higher rates. And in general, it's don't fight the Fed. If the Fed's in an easing cycle, then you want to be a buyer, and vice versa. But I don't know. We've seen this a lot where all there seems to be is cash everywhere in the world, waiting to rotate into everything the next, whatever the cycle is, it's like a rotational cycle. It doesn't seem to be this sort of concerted risk on versus risk off scenario. I mean, it did sort of in that March and April insane rally that we had, but that is something to keep in mind, right? Easy E, Chris, what's up, man? Maybe I call you Easy C. So, just from a global macro here, we got to pay attention to the bond markets. And, the way that they've been selling off lately, and the point that they're getting to is pretty significant in my mind. You now have the 10-year at 4.63 and the 30-year at 5.143. Like, at what point does this become a major factor? We're still kind of stuck in the mud in the construction business, at least here in Colorado. And so the longer the construction industry and home building industry is sort of stuck in the mud, the more potential you have for Main Street to continue to get hit. And then if you continue to have higher rates and inflationary pressures, it keeps inching its way towards a scenario where we could really have stagflation. upon us. So I'm not saying to not be long at all, but I'm respecting this price action pretty closely here in the bond market, and I've been, just as a sort of a quick way of gauging things, when I start making money on the short side, you know, it's a tell, right? Like if you're a trader who trades both sides of the market and you're trying to trade short and you keep getting run over, then obviously you're not trading with the wind, right? You're not trading with the overall larger trend in a bullish market. And if you start seeing things rolling over like we've had, and you start trading to the short side and it seems to be easier and you're making money on the short side, then you have to know that's telling you something a little bit, right? So here we are, we've opened, we've had some moves higher, and then looking across the board, like basically everything has sort of rejected and is now going offered, with crude going bid, right? The exact scenario that we have to be wary of on a sell side kind of activity. So let's just look at some of these other ATR boxes for a minute. Here's the ES. And one thing I am a little leery of is when you have an overnight up move like this, and then the market opens near its high in the overnight, but immediately starts selling off, that could be, and it makes for an interesting trade, right? Because you either have a bunch of people short that need to cover, or you don't really see the follow through. And anyone that was getting long up here thinking there would be follow through then starts to become the seller. So if I'm looking at this through a more bearish tone, I'm saying, what if the high of the day is in? And if all we do is put in 5-day ATR range, the target would be around 74.50. Now for me, if we break those levels here around 65 or so, then we should trade 74.50 easily, but we should also probably trade down into the 7400 or 73.90 area, and that could be today. So the general filters that I use are, if we're below the RTH open, I'm expecting that the market is trying to print a red candle on the daily, and I want to be a little more biased towards the short. And then vice versa, if we get above the open, then you want to be a little more biased towards the long. That's how I just basically trade, and from there I look for entries based on sloping moving averages, support and resistance, and my level sheets. So here's the NQ. You can kind of do the same exercise and you can just quickly do it. You can see when you zoom out, if the high of the day is in already in the NQ, then we could trade right straight back down to 28,586. And again, I'm not saying that's what's going to happen. I'm just using this as a quick visual of how sort of nasty could it get if it just drops straight down like what the bond markets are doing this morning again. So for now, I'm just going to do it like that and see how these pan out. Okay, quick glance across the board as well. I watched the advanced declines quite a bit. We opened around 370, printed up to 570, then went straight down and negative on the day. We're now currently minus 90 on the day. Quick look around the Mag 7. There's sort of a mixed board there. Apple, Amazon, Google, Meta all kind of offered. Microsoft, Nvidia, Tesla showing strength. And then on the big board, the S&P 500 heat map. Strength in the techs, pretty green there, and then pretty mixed, but a lot of red across the rest of the board. So again, the the rotation continues to be a tricky element, I would say, to our trading lately. And for me, who likes to go short, it's just a reminder that it's been a reminder that when the market starts turning and going bid, you got to be ready for that as well, because you know, they just are constantly looking to rotate into the next thing. And so whatever my opinions are, I try to just really sort of have those as maybe a general framework, but I don't want to be too opinionated about it, because my opinion doesn't matter. The only thing that matters is price action, right? And if you formulate a trade based on sort of a specific idea, and that idea doesn't seem to be working according to how you framed it in your mind, then I like to say respect that price action, because it could be that everyone else is thinking the same way, and the positioning is a big part of where the price is going to move to, because it's the positioning that makes buyers or sellers anxious, and it's the anxiety of the buyers and sellers that moves the market, right? I don't know if anyone has sort of heard of that before or thought of it in that manner before, but that's really the nuts and bolts of sort of the capitulation on each side. Like, one side's capitulating all the time, right? Is it the buyers who are paying up and taking the offer, or is it the sellers who are afraid and are hitting the bid? How that positioning plays out is really what pushes price, you know, through levels and that sort of thing. Support and resistance are only support and resistance, you know, if they hold, right? So if there's a level and it's supposed to be support, that's great, as long as the buyers show up, you know, and start supporting it at that level. If they don't, then, you know, they break the level, and that level now becomes resistance, as the buyers that thought it would hold now become sellers when it flips around again. So quick, just easy stuff about how the markets move. You know, the other point to that is you don't have to have a lot of trade. This is sort of coming from the housing market, right? Like in 2008, everyone put their house on the market to sell, right? So you have like a whole bunch of sellers and nobody buying, and your realtor comes in one day and tells you, hey, your neighbor who has basically the exact same house as you just dropped their price 20,000. So what does that mean? Well, now you're above the market because you've got someone else out there that has their house listed at 20,000 below. So why would somebody come in and pay 20,000 more for your house than your neighbor's house, right? So what happens around the neighborhood? Everyone has to lower their price to be at the market. And some people lower their price even more because they're desperate and they want to sell in front of, right? And meanwhile, there's no buyers. So there's actually very little trade execution that's going on. But in spite of that, what happens? Prices drop. And that's because the sellers were anxious. So they're offering their houses lower and lower on the market, pushing prices down with very little houses selling because there was only, say one buyer for every 200 sellers or whatever the case may be. So when things get lopsided and when prices really move and volatility really increases, part of what happens with price movement is you have people canceling their bids or offers, right? So you can have market orders coming in, of course. You can also have people saying, if you're short here, but you're very comfortable and you're short and you're very comfortable with your analysis, or your short is from way higher, then you may just be looking at this saying, well, I don't think it's gonna hold here, so I don't want to buy it at 09. I want to maybe buy it at 89 or something, right? And so as prices move your way, you can also just cancel your bid or lower your bid, right? And that can cause, as people sort of collectively do that, the market can go lower based on the collective action of people hitting there's a button on your screen, right? Cancel all bids, cancel all offers. Well, why do you think that is? Because when you get into a panicky scenario, it's an easy way to say, oh yeah, I'm not buying it here. Cancel all my bids or lower it 100 points, or whatever the case might be. So all right, so I kind of rambled a lot here. Wondering if anyone has questions at this point. What do we want to do here? What do we think the market's going to do? We now have a pretty big rejection going on in NVIDIA as well. So be curious to see, like, does NVIDIA now go back down and fill that gap? But we've got a pretty good bid going into these tech high flyers, MU, AMD, Intel. I don't know what some of these other ones are, but collectively, here's the heat map. So collectively, this group right here, you see how much market cap they've gained, and you start seeing how it compares to some of the other big caps. And so even though I'm watching these bond markets closely, the market just has a lot of money to rotate around all the time. So it doesn't mean that things are going to get nasty at all. Like maybe we've already put in our little back and fill correction and we're ready to start taking another leg higher. I don't know. Let me move these levels sheets across. I've pointed this out a couple times over the last couple weeks. This scenario happens upon occasion. It happened a couple weeks ago with crude oil when it was trading like 68. And we had a similar thing. I can't remember if it was a false up day or a false down day. But typically you get sort of a doji type candle, and a candle that, what this means by it being a false down day is it printed a red candle, but it was actually up from the day before. Oftentimes when you see that, it could mean that you're going to see some pretty good volatility in that instrument for the day. Doesn't mean that you will for sure, but and I don't have any studies on kind of how it shapes or affects things, but I do want people to look at this and look at the levels and then look at the crude chart, right? Because crude traded up. We talked about before that crude already had put in a almost full 5-day ATR in the overnight, right? But also it traded up to a high here of 84.95. Okay, that was just 17 minutes ago. And look at the levels we have on the sheets. We got just through the R1 level at 84.80. Look at where the 50-day moving average comes in, 84.98. Okay, so within 3 ticks, crude traded to that, right? And that is a significant level. In my brain, the market really sort of pays attention to these 50-day moving averages. And I've been talking about that in my room for the last few days. Is we have a pretty interesting scenario here between the ES and the NQ. ES showing a 50-day moving average around 7,500, right? But the NQ until this morning, it had traded a lot lower and much sort of deeper through the 50-day moving average, which is now on my sheet up at around the 320 level. Okay, so the question in my brain was, is the ES going to hold and the NQ going to move back up to its 50-day and retake that and then really springboard us into additional buying? Or is the ES, the YM, and the R2Y all going to catch up and start moving lower through their 50-day moving averages by not just a little bit, but a little more substantial selling pressure? And in the NQ, I also show that 5-day and the 13-day moving averages have rolled over and are now sloping downwards. So I have the NQ currently on a short only signal. If I were to trade it, which I don't often do these days because it's a little too volatile for me, a little too much risk. But it is something to kind of take note. And ES and NQ both putting in these, big sort of, I don't remember what you call this style, doji, where it closes near the bottom, dragonfly or something like that. But whereas if it's at the top, I think it's more like a hammer. I don't know, I'm probably getting those wrong. But regardless, they're dojis that kind of, moved up to this level and then closed all the way back down. If these levels break, then you could be sort of anticipating a targeted move, more towards the previous breakout point, and maybe that's all the way down to the 200-day moving averages. Okay. So I'm still flat, not doing anything so far. The concept that I've used for a long time with range bound versus trending markets for, day trading has been that I want to see the advanced declines plus or minus 700. So when we have the advanced declines right here in the middle, kind of flattish, everything's kind of, there's a lot of red and a lot of green, a mixed board, then it could just be that we're gonna see like a summertime trade here, a range bound kind of trade, and possibly we're totally on hold until the Fed meeting. That's certainly a possibility. um, I hadn't checked our calendar for today, but we did have this little employment number, ADP. I don't know. I don't pay attention to the news that much anymore because partly it's hard to listen and pay attention while I'm trying to focus on charts and things. But also, like, it's price action. How does the market interpret what's happening? So there's not a lot on the calendar today. And let's see, tomorrow we've got mortgage apps, crude oil inventories, 20-year bond auction. Maybe that'll be interesting. Let's see, Thursday, Chicago Fed, jobless claims, some short bill auctions, natty gas. Get some numbers out of Japan on inflation. It's after the market close, Thursday night. Friday, you get building permits, PMI, new home sales, Kansas Fed, and the oil rigs. And then next week, we get pretty much into the meat of it, going into the Fed meeting on, what's the announcement on Wednesday, I guess. Okay, so it looks like NVIDIA might want to close its gap. We're currently below the open. We have a 15-minute moving average, which is this one that's down sloping, but a little range here and an upsloping 1-minute moving average. But you see how the NQ acts like it might want to break here while RTY and YM have gone bid. Currently, I'd be short side biased based on 2 of my 3 major sort of indicators, but my main one is actually the 1-minute. So even though we're below here, you have to wonder if this level doesn't hold, and if the NQ doesn't want to try and get back up to that 50-day moving average. We'll have to see, right? This could be a great long entry right here because they know they have stops they can run above the open and above the RTH high. But if it starts to break, then everyone who's thinking in that manner, become the sellers when and if it breaks the lows. So it is, I think it's a tricky spot here. We haven't had a lot of good, short side trade for a while. So these things can be very quick when they when they start turning and going bid again. One of the better things to trade against, in my opinion, is also just the RTH open. And the idea is sort of that if they're sellers off the open, the idea is that they don't get enough of their sell orders filled. So they usually put in a time constraint or a limit, right? Think of it this way, as like if you put in a market, say a sell stop limit order, instead of it being a market order, you have a sell stop that triggers and that'll sell down to a limit price that you set. That's how some of their program trades go off, right? They open, they say, okay, if the bond market is opening X number of points lower or dips lower, or however they do it, they might say sell the open down to this limit. And then they wait. Their sell program stops, the market starts to lift a bit. If they can get the price back up to that opening print again, often they still have more to sell to complete their orders. So that opening print should become good resistance, and it could be a great spot to enter short side. Or if they flip it and get right up through the buy stops above the opening print, then that would be, it's a perfect support resistance line that you can use every day in your trading, where if they get back up through the open, you look for a nice first test of that opening print again to get long, with your stop somewhere below based on your risk and the levels and everything you're seeing, and then see if they can expand it to the upside. So as things are developing here, I'm checking my level sheets. You can see I'm trying to break a little bit in NQ. But look, we have a level right here, R1 at 76.5. We have our weekly pivot at 79.75. So those levels, and then those levels, could be pretty good levels to trade against on the long side. On the ES, you have the pivot at 04 and the 50-day right at 7,500. So it already tested perfectly, pretty much, that 04. What was the low? 04.5. And they started kind of buying into that a little bit, right? You're seeing some improvement here in advanced declines again. They're trying to get back to where they opened, currently trading 280, positive side. and you have, let's look at this ATR box again on the YM. It probed and got through its overnight high. So let's assume, I know that that can be wrong, but let's assume the low is in today for YM. You know, it was kind of weak yesterday, relatively. So what if they just, here's our low of the overnight. What if they fulfill the ATR? It goes right back up to this 52.6 level, which doesn't do anything, right? It's just normal price range action. You know, summertime chop probably is a better way to think of it. We've got maybe a little bit of a bear kind of look on the Stock Traders Almanac, but that doesn't mean we won't get some rallying in here as well. And this all could just be a big back and fill, you know, put in a big nice range, test the lows of that big range a little bit, then start rallying and finally getting back up to all-time highs again. So even though I like trading short and I'm fairly good at it from starting out in 2008, learning from my dad on how to trade bear markets, I'm not like just like rooting for everything to constantly fall apart. It's what's the price action and where's my opportunity to make money. Okay, so ran a few stops there on the NQ and now has reversed and back up into this range. So that could be the reversal signal we're looking for. Again, I think that NQ, these 50-day moving averages don't just sort of go by the wayside. Like they don't usually go collapsing through straight down to the 200-day unless something like very, very different is happening that's changed everything. So it's like the violation by NQ to get down through it, you expect it to go back up now and retest that 50-day. And then the question is, will it become real resistance at that point, or do they reclaim it and really start buying back in to their positions? That's my expectation for what might happen here. I kind of thought that the ES would get lower and maybe retest that 73.80-ish level, and we could still, and that could happen quickly, but you know, we'll see. Day like today, I'm gonna try to really be patient with, you know, seeing if I can get one or two entries, because I'm not sure we're going to get a whole lot. This feels very summertime to me right now. So let's see if they just sweep this back down through now on the NQ. I kind of doubt they'll do that, but they definitely could. And now we're getting sort of a scenario where we could have all three of my filters telling me to just be trying to trade from the short side again, because price just broke. We're seeing a roll over here in this shorter moving average on the 1 minute. Now I want to be looking to short with the stop up above somewhere, depending on your risk tolerance. On the other hand, again, with rotational factors, we're seeing some buyers coming into the bond market right now. And whether or not that will sustain, it could just be a pullback in a downtrend. But if they're ready to take some profits there, we could see that bid come in today, and that could help. So I'll get my trader platform up and running, so I'm ready. Nice hold of that level, right, on NQ. What was leading it? YM and the advanced declines. So advanced declines now 330, back to their basically opening print. Here's my trader platform. So you can see if they're serious about selling it at all, then if and when it can print here, the open, they should reject it, right? If it can't even print to the open on the NQ, and then you see NQ go back down and fail, then there could be a bigger move coming to the downside. So you can, when you're fading this kind of move at a level, you can look at it as a zone, and you can put on different legs, or you can be precise, or you can also try to look for the false breakthrough, like if they run some buy stops but then collapse it back down, then you can wait to enter. I kind of like to just take the guessing out of it, and I usually, if I'm fading it, I would fade it one tick below. So 26, faded at 25 3/4. And see what happens, right? Right now I'm kind of watching a little recovery here in NVIDIA. Again, bond markets have gone slightly bid, so I feel like if there's some stability here in the bond markets, that's going to be helpful. But it could just be a trap. It could be a little pullback in a sort of bearish bond market scenario. You are getting, look at how perfectly, again, this CL chart looks. Fulfilled the ATR and now it's pulling back. So kind of what we want to see with CL is, for broader market bullishness, is we want CL to break the open and come back just right down into this range. We really don't want to see, personally, I want to see CL go to the moon. But from the broader market's perspective, we want to see it stabilize. Like, this should be, in my opinion, a little more of just the new normal range for CL. Now, maybe we now trade between 70 and 90 for several years, or who knows, right? But we'd like all this stuff to get put behind us, get back to some normalcy. All right, so what was the level here? Is there a level here? I thought there was. 75.31 and a quarter is our R1 for the ES, with a weekly pivot at 33 and a quarter. So those are good targets to see if we can hit those levels, reclaim them, stay above them, and then move higher towards 5-day and 13-day back up at this 75.50. The NQ 5-day comes in at 245, so that's, I think, pretty near where we stopped, right? Yeah, look at that. Look at the precision on that, okay? The high was 246 and a quarter. Look at the 5-day moving average at 245. So that's why I do these sheets every day, is to have a quick reference point for all kinds of different numbers without having all these different lines across my charts, but just to reference and say, like, interesting. Okay, well, and it's basically as a reminder that the algos move this stuff to these levels, and there's a reason then that they reject, or that they become support, converted from resistance to support. So even though the algos are used to sort of gaming us all the time, there's no reason we can't game them as well, So we know that there's buy stops above the open here. Whether or not they can run them is the question. But I have an upsloping 1-minute moving average. We keep sort of breaking the levels to the upside. The NQ is still having a little bit of a hard time right here, and it could reject pretty hard. So I'm watching for anything else that can show me a way to read the price action that might be meaningful, right? Here's where does this become now support? Do the buyers come in because we're now above the open? Or do they do sort of a false breakout here and they start selling it again? You're not getting much participation so far on the NVIDIA side. But if it starts rallying a bit more here and doesn't close its gap, then that would be a little better. We are seeing a rally of crude. It held the open and is now pushing higher. So I think I might try a sell stop entry back below the open here if it becomes false. Could also try one just at the RTH high or at those levels above where 31 and 33. I'm gonna try one down below the open again if it rejects. Now you want to see it get up through this 33 level and then hold. Okay, but while we're simultaneously watching the NQ, oftentimes it's a rejection of the open here, because if they have more to sell, then they're glad to execute it at the open. See how NQ failed there. Couldn't even get through those buy stops yet. It still can. It could explode up through these buy stops and tag that to a 50-day moving average. But if it can't, if they start rejecting this here, then, it's not, we may not have enough oomph right now to really do this. 2-year bond yield, 2-year bonds just made a new low. Okay, so watch the bonds closely. See if the see if the 10s and 30s follow. I might try one here on the short side from the RTH. So I'm offered at 32 3/4 on one. Okay, filled there. See how NQ rejected so far. Let's see. How it might be going through. So if this rejects right here, I'm looking to add to it. Crude is near its high. Okay, the 2 years making a new low again, guys. So does the market care? Does the market notice? Right there, so far, I couldn't even get 3 points out of that. So this could be me playing with fire a little bit. Crude is right on its high, so kind of worried that this fails, especially if the rest of the bonds start dropping. If you see the 10-year and the 30-year start to make new lows again, then it could reject hard. We're seeing the advanced declines kind of stall out a little bit, but now here goes NQ. Okay, I'm short 3. I want to see it sweep lower. The crude oil just broke out. Let's see if it rejects now. I don't want to be stupid about it. I should be able to get a retest to the open, and then there should be stops now below the open. When it can't quite get to your bid, that can be a problem. But I'll give it another few seconds. I might just take one off here. Okay, I took one off. And I just want to protect my position here. See if I get lucky on this, and if it starts to sweep back hard to the downside. Okay. We're getting some rollover now in the advanced declines. So again, if they break the open here, that's where you want to see that momentum selling coming back in, where they've trapped the longs and they start sweeping them back down again. So we're getting some down ticks. We got minus 300 down ticks. Let's see if we can get, you know, a minus 600 or 800 down ticks. And if we can get filled on that 24.5. There we go. Yeah, come on, baby. Come on. Oh, you little. Minus 450 down ticks. Oh, you gotta be kidding me. Minus 420 down. Oh, they're gonna hold it, aren't they? No, they won't. Now it should collapse, right? Come on. Crude is pulling back a little bit though, so it could hold here, right? They like holding it sometimes on these 25s. Now I just want to look and see what else is going on. We had a big rejection forming on the advanced declines, on the YM. So now I really want to make sure that I don't let this get away from me if this is the good buying opportunity. So I've got the high of this little green candle at 29.5, the high of this one at 31, and I have my stop at 30.25, 29. You know, it's likely that I'll just get stopped here, like that they'll just buy them. But if you start to see follow through in the CL going higher, and if you start to see the 10-year and the 30-year bond market start to test their lows, then I would expect the markets to sweep back down to their lows and possibly just trade right down through it. Okay. So be careful. If you don't see it come back up and sustain here above the open, they could get a lot more serious to the downside. But honestly, that was pretty good that it held so far right there. So, you know, let's see. It could still hold and absolutely rip higher, especially watch NVIDIA now for confirmation, either that it's going to go back higher and up into its range, or if NVIDIA starts to tank again. Well, not tank, but I mean, if it goes down and tries to fill its opening price, then the longs could be pretty severely trapped right here. What I want to see now is a closing print below below 18 and 3/4 on the 1-minute chart. And then I would look to move my stop down to around 22 and 3/4 based on the chart and the levels, to see if I can basically hold a runner, see if this becomes a runner, and if they actually sweep the downside. Now I want to see what the RTY and YM are doing. I mean, we haven't done anything. This pullback, if it comes perfectly back into the middle of this range, it could hold easily and keep moving higher. Sometimes where you want to see it hold is here at the top, of the range. If it starts getting into the middle of the range, that's where the price action starts becoming like the sellers start selling sometimes in the middle of the range because they're afraid that the bottom of the range is going to get hit and taken out. So sometimes they'll sell in front of, right? But they're not, so far they're not doing that. This could be sort of a last gas for the longs to get out, but I wouldn't be surprised at all if this just becomes now an up day and they move it again back to the 50-day moving average on the NQ. Would not surprise me at all. It sort of needs to happen, right? So looks like I'm going to get stopped out on this, but if NQ rejects the open again and goes sweeping back down like this, then I could have a trade that becomes a runner. But what I'm kind of more expecting is to reclaim the open here, and now that the expansion is there for the upside. Hey Delph, how you doing? Good to see you. So the tell for me right now, the biggest tell is if we see any additional downside in the 10-year and the 30-year and NVIDIA. Okay, I'm flat. Okay, now this looks like a big cup and handle, right? In the NQ. So this thing should go ripping through the high, and it should target that 50-day moving average. So 320 is our first target. That's a really important level. It needs to trade so we can see how the market reacts. If it reclaims that 50-day moving average, we have an R2 at 376. We have the 13-day at 540. And then you really start to possibly build on some positive momentum from there. And if bonds can stay a little bit supported here, if you start to see Nvidia on the offer again in a hard way, and that could be that Nvidia, that was just a pull back in a little downtrend. And this thing does not have to hold. It can reject. Remember what that was? The high was at the 5-day moving average on NQ, where both of those are now sloping. The 5-day and the 13-day are now sloping downwards. I have a short only signal filter on the NQ personally. If I were paying attention to that, if I were trading it, I would be waiting to see if this rejects again and then looking for that short entry. And now we're getting a pullback in crude, possibly some newsy stuff coming out. Nvidia back up right into the middle of its range. And a little bit of a bid in the bonds. So where the 2-year made a new low, 10s and 30s held and made higher lows and are starting to look like they're moving a little bit higher. So now if you make this assumption, right, that we're back above the open and we're holding and we're going to move higher, and we can take our ATR box, set it on the low print from the overnight. And again, that's if all we do is fulfill our 5-day ATR of right here, $79.50 in the ES. Then we go from these lows right up to this high from yesterday, 52. And if we can get through that, then yeah, you can expand it. There's still some resistance up here that you'd have to get through, but plenty of buy stops for the algo sharks to feed on, right? So our ATR box on the NQ. And pretty good buying in tech. So a lot of the red on the board today could actually convert over to green. And be careful because NQ is threatening to reject the open once again, right? Looks like the 2-year still has eyes for lows. Got a VIX at 17.4. That's no big deal. You can kind of look across at some of these things. Bitcoin 66K. 2 years 4.253. 10 years 4.622. And the 30 years 5.13. Gold market trading 40.72. Silver at 59.25. Oh, look at this. Dollar yen new highs. I mean, that's a pretty impressive move there. I don't know if I can tell you what it means, but I'm not seeing all that aggressiveness yet in NVIDIA here. So I'm still worried about bonds if they start moving lower again. Yeah, nice. Yeah, you're buying me a beer for that one, buddy. You guys see that chart? Let me pull this across. Look at that chart right there. Every one of these has been bought, and now it's back up through this level and just really moving. This is it's something to watch. I would keep that up, or at least on your watch list. Nice. You've traded that some over the years, haven't you, Chris? The euro dollar? Yeah. I think I traded it a few times back in my early days, futures stuff. All right, we could be failing here at the open. Advanced declines are looking like they're going lower. Crude tested its open and is held so far. This could be the start of something here. Whether it goes one way or the other, I do not know. Two-year has eyes for lows again. Oh, there goes NVIDIA to the upside. So I'm going to cancel these. It might have been the right trade still with crude going higher, but sometimes I get caught when I use stop entries and they just trap me. They run the stops and it's a false. Then I get really annoyed. Instead you could be going with NVIDIA here, but you're now seeing advanced declines breaking again. And again, I don't know if we'll see much more out of the bond market today. Maybe just we go to sleep. But if NVIDIA starts to sag again and goes back below 205, I would think that it will target its gap fill. Right here, we want to see this become a little false breakdown of the open and now have it recapture the open. Then if you're looking for long, that would be the place. Getting some down ticks here. Pretty much straight drop in advanced declines. You know, they tried that 250 level and rejected, now trading at 60. So still not like that meaningful. It's just kind of a nothing scenario so far. We want to see NVIDIA hold 205.5 basically. And here's where if you wanted, you could try a buy stop above the open here, right? Because now they're setting it up. All these buy stops now exist up above. And crude is getting dangerously close to moving through that 85 level. All right, got some minus 500 down ticks there. Now trading back positive on the ticks. So sometimes that's a good spot to sell into. And with crude moving pretty close to that breakout level, sometimes those tick reversals can be nice indicators for actual trade reversal as well. They get everyone thinking short or loaded up short on those down ticks. And then when you start seeing that reverse, so it went from minus 500 plus 400 on the ticks, right? So does crude fail here or do the markets fail? Okay, I'm looking to to buy here if I can get it. I'd like a retest of the open, but now it's gone firmly bid, right? So you might have to pay up on this one if you want it. Okay, I got one at 33 and a quarter. Might just, since that's sort of a chase, I might just wait a second here and see what happens. Okay, let's see if we can get that NQ up to that 320 50-day. And if it gets there, does it really explode or not? I think it could. Oftentimes those reclaims are really good, but sometimes it can just be a huge resistance level too. But I think the fact that these other markets, well, at least the ES held its 50-day, could be really good. So I'm hoping to see a print now of plus 12 points on this. So it would be 45 and a quarter. I want to see a close above 45 and a quarter to then trail my stop somewhere around 41 based on the levels. But this is now my controlling bar, and I don't really want this bar to be broken. Like this previous high of the day should hold. They should not come back down through this controlling bar. So that low of that bar is 34.25. So I've just got it, a couple ticks below that. Let's see, I think my level was 33.25, I think, for that pivot. Wasn't it like the weekly pivot or something? I can't remember. Weekly pivot 33.25. And the R1 was 31.25. So you want to see this be the quick little retest of what was resistance, now support, hopefully, and then it starts ripping to the upside. We're getting the confirmation in crude. If crude can drop back down below its open, we should target the tops of these ATR boxes. Okay, do any of you guys have any questions about kind of what I'm doing here, or how I'm doing it, or my level sheets, or anything else? We're getting a little lift now in the 10-year and the 30-year. So if we can break these little levels here on those, that could be good. I don't know. It's hard to know with the rotations, right? Like, been curious of like, do they sell bonds and buy equities? Do they buy bonds and buy equities? On the ES, it would be like near yesterday's high, like 52. And on the NQ, it would be like, on the NQ, it would be 365. Assuming the overnight low is the low of the day, and if you're not ignoring that overnight price action. So sometimes people say, yeah, well, the overnight doesn't matter that much because there's no volume in it, right? So if we take this box instead and move it up to say that the RTH low is really the low we want to move this box off of, I mean, it's okay to do that. Just for me, it's just like, here's that illustration, right? So if we take that RTH low and get all the way back up to 84, that's great. But it doesn't, it's also just right up. We're still in this huge congestion area and range bound trade. So either way, it's not, the price action today doesn't seem hugely meaningful to me at all, right? But let's look at that on the NQ as well. So if NQ, if we ignore that overnight, that's more meaningful to me, right? Because we're getting closer and closer now to that 320 level, the 50-day. And so if it's a capture and convert, they start buying the 50-day, then that's more meaningful. Because if we can take that to the upside and really, target, say, the 720 then they can, the more they really start buying them, the more they can actually start targeting the big stop level up here at 820 and the massive stop level above 30,100. I mean, that would be a really big day on a, so far it doesn't seem like it should be much of a big day, right? But I think if, let me show you this on the bonds. Okay, here's what I watch. So I've got my tick chart and then my 15-minute bond charts, and this is the 1-minute crude chart. But with bonds, they've been in this downtrend now for the last several days. And so the fact that they opened weak and then the 10, you see what I'm talking about with the 10 and the 30, when the 2-year made a new low, the 10s and 30s held this low, and now they've broken this little level here, and well, 30 looks like it wants to here and there. If that's now the higher low of the day and they can move the bond market higher today, then I think it could turn into a bigger upside kind of day. If you're looking at the big board, the things that look pretty interesting to me are the fact that like Caterpillar's having a good day, AMAT having a good, up 8%. What's this other one? LRCX up almost 5%. Caterpillar's up 2 3/4. CMI up 2 3/4. Triple M up 8 3/4%. There goes crude back below its open. YM just made a new high. RTY made a new high. So let's look at those boxes. Well, YM, we already have it adjusted. Let's move this this RTY box up. There. Let's move them up higher. Maybe we get them. There we go. Let's go, baby. Did I get stopped out? I hope not. Nope, I didn't. That's cool. I was looking for the close above, what did I say, 45 1/4, because what happens is if I get a trade that goes 12 points my way, I don't want to give all that back. I want to at least lock in 8 points or something, right? And then hope that it just keeps ripping. Of course, who knows with Trump tweets and so on and so forth. Now here is the support level that we want to hold. And where did the NQ trade up to. The high was 310.25. Okay, that's pretty close, within 10 points for NQ of that 50-day moving average. Let's see. And then the curious thing, right, is that the 50-day is still up sloping. So based on the slope, the projected 50-day for tomorrow would be 354. And believe me, the algos pay attention to that. They use those same kinds of projections. So 320 and then 354 and then 376. They just start to look like numbers that are all going to get taken out. Especially if NVIDIA starts catching up here. I'm a little concerned because they've gone bid on Apple again. Sometimes when they buy Apple, it's sort of a defensive play. And like Meta and Microsoft and Google are now acting weak. Tesla's pulling back some, but Amazon and NVIDIA are starting to look pretty good here. The 320 level should at least print on the NQ. Okay, so it's imminent. If it breaks out to the upside again here, it should print imminently. And we really want to watch that level to see what happens. Advanced declines could not go negative that last try. So we'll see if advanced declines can also go out to new highs if NQ gets up through the 320 and holds. Now let's see if there are a lot of buy stops above this level, it could really start ripping. But they could just as easily reject it hard. So that's why I want to see the 1 minute on the ES close above 45.25, and then I'll just have my stop somewhere below this recent little high, right? Because I don't want it to be a false breakout. And oftentimes when I do that, I get stopped out. So just fair warning. It's like, it's a way to try to control my emotion by having a trade that's a winning trade not turn into like just a break even or a full loser, especially because I only put a one lot on that long. I didn't add to it. I didn't put a size on it that I could layer out of some as it went my way. So looks like we got, look at that high, 319.75 on the NQ before it started to back off slightly. Now that doesn't mean it's going to reject hard, but these numbers work, man. I'm telling you, the algos know and they pay attention and they watch this stuff. And it's not that when it doesn't reject hard, what that means is, in my opinion, is that they they reach that level and the buy program just gets paused or shut down momentarily because they're trying to see if more buyers come in, if there's more fuel for the fire. And then if they see that, then they'll start continuing to push it firm, and that's when they're selling into you, into your buy stops. If you're trying to fade this stuff, you're the buyers, right? And you're buying up there. But look at crude now, reclaimed the open. I'm not maybe not wanting to overstay my welcome on this. I've got this little bar's low is 41 and a half. That's about where I want to protect my profit. Let's see how they've just pulled back 20 points off that 320 level. But watch, you're seeing advanced declines move higher, Apple on its highs. Let's see if NVIDIA can start joining and really go. I'm a little nervous. I'm nervous, but I also know how explosive this could be if they really start coming in here. So look, MU is up 10%, Intel 7.5%, AMD 6.25%, Dell 5.25%. Some of these other names 12%, 7%, 4%, 11.75%, 10.75%. This bar is still 41.5. Let's see if they tick 41.25 and then rip it. So it'd be pretty easy for them to bid it up through the highs from yesterday and gobble up those buy stops up there, I think. Advanced declines are still moving higher, trading 310 now. See if this is just a minor little pullback for NVIDIA, and if it starts going big time green and targets the highs. I'd like to see NVIDIA ripping. Now it's looking like a full rejection, but that doesn't mean it is yet. Although it doesn't look good, and the bonds are now rejecting oil, moving higher again. That could have been a shakeout, a little shakeout, or it could be a full rejection here. So either way, you want to be careful. If it's a shakeout, then this low should hold. Yeah, NVIDIA, come on, let's go, baby. Yeah, the NQ wants to reclaim that 50-day. Yeah, come on, get up through there. This could be a good reversal sell signal too, but I'm just trying to be patient on it, see if we can get it to continuation. Oh man, it's too quick, right? It's watch NVIDIA. I think if NVIDIA starts to explode here, we're in good shape. But see if it can get through the 207s, 208s first on NVIDIA. Looks like it wants 207s. it to hold right here, and if it doesn't, I don't know what's going to happen. So if it does, I might be looking at adding up above. Now you're seeing a rejection in the bonds. So this could be just a good place to be getting that reversal signal, but I don't know, the algos can see this positioning. And I think it's pretty easy for them to exploit it higher. So I'm going to try to, like I said, if I get this breakout to 45 and a quarter, I'm going to move my stop up. I mean, I could just take it off right here, but if I do, then it's like it'll go ripping higher. But I don't like the way these bonds are turning. But it doesn't mean that the market will turn. Like sometimes it's sell, you know, they could go into this mode where it's sell bonds and buy equities. I don't know. I don't know how those rotations should work, right? So all I want to do is let the price action tell me. This is sort of a reversal in terms of the 1 minute moving average has started sloping down again. But if it prints up big and quickly, then that won't end up looking like a downsloping moving average. It will just look like a sideways moving average. So because those are lagging indicators, you have to try to anticipate what the moving average is trying to do or going to do if the market trades this way versus that way and so forth. But yeah, look, bonds are eyeing lows, and so I want to either think that the market's gonna move hard one way or the other based on that. It could very well be to the downside. But as long as I'm in a profitable trade, I'll try to just manage the stop. That's what I mean by if you have a thesis about a trade and your thesis is, for instance, that, hey, if bonds are moving lower, then the market should move lower. And if bonds move lower and the market moves higher, then you got to respect that. Crude is back up near its highs. So this is a very interesting spot right here. Okay, so far it's looking like a reversal. Will it be a false pattern to the downside? Let's go. Come on, take it out now. Doesn't act great. I mean, see what's going on in these other markets. YM holding up there pretty well. RTY came back, tested support. Two-year eyeing lows. Now the 10s and 30s are looking kind of weak. I think the YM has eyes for highs. And let's see if it can pull us through. I don't believe that trading 319 and 3/4. Oh, it did trade 320. But it sure didn't trade there for long, and if it goes up back up to it, it should move through it. I want to see also what's the Dow components looking like. So the losers in the Dow are Salesforce, Walmart, IBM, Mickey D's, P&G, Nike, Amazon, Google, Home Depot, Microsoft, Visa, Travelers, Sherwin, Amex, Amgen, Coke, and Disney. And then on the upside, Cisco, Chevron, Apple, Merck, Johnson & Johnson, Boeing, JPM, NVIDIA, Honeywell up 2%, Goldman up 2 3/4 or 2 1/3%, UNH up 2.5%, Caterpillar up 2.5%, 3M up 9%. YM just made a new high there as well. RTY is eyeing highs. A little bit of a moment of truth here, as we could be just forming a big kind of head and shoulders or double top. I think the NQ wants that reclaim of the 50-day. All right, well, can we get sort of a lunchtime buying squeeze here before they go for their 2 martinis? Still have 5 minutes left for the close of this 15-minute candle. Just again, the biggest question in my mind is, at what point do these interest rates matter? I kind of feel like the market wants to test 5% on the 10-year yield. And I don't know if they can do that. It's a pretty big move to get there prior to Fed announcement next week, but it wouldn't surprise me if they do get there, because it's sort of just like a test of the Fed to see, you know, what they would do. If we got there, would they hike rates next week? And would the market actually respond negatively to that? I mean, usually it would. You would expect that it would. Um, but it hasn't exactly fallen apart based on Warsh's hawkishness. So, there could be some element here of that the market likes his hawkishness and just likes the fact that he stepped in and said this price stability is going to be priority and we're not going to let it get out of hand. So then the question is, do the bond markets themselves sort of price it, price it forward and sort of say, yeah, well, it's getting out of hand and it could continue to get more out of hand. It sort of forces their hand. I'd really like to see this low not get stopped out. You can see where my stop is, just below the low of this 15-minute candle, hoping that, if we had our little downside push and recaptured, then maybe what we have here is like wave 1, wave 2, wave 3, wave 4, and maybe we get our wave 5 up through yesterday's high. Yeah, I want to say it was Scott Andrews who used to use that sneaky lunchtime buying. Basically, his theory was, whichever way the market's been moving, as you go into that lunch hour, they want to, they basically want to cover some more of their losing position ahead of going to lunch. So he would say, get ready for some sneaky lunchtime buying here to basically run those upside stops. I think it was just one of those patterns that also he noticed and saw develop over the years where, every day around this time, this is whether it was just one firm doing it or however, it played out. All right, 20 seconds. Like I said, I'm hoping to not get stopped on this. It'll sort of annoy me if I get stopped right at the close of this bar and then it moves higher. But it looks like it wants to move lower anyways. They could do a little false breakdown here and then rip it back out to new highs. It's sort of like, was that enough of a test? Usually the rejection of the 320 level would happen a lot harder and faster if there's real sell programs coming in immediately off that level. So what I like is that, yeah, it came off it a little bit, which is fine, but it hasn't come off that much. So it's not like there was real hard selling that came in off that 320 level. So in my mind, that means that it has a good likelihood that it'll go back up and retest it today and maybe take it out. And so if this was our pullback, right, and this, what was previous resistance becomes support, and that support holds, and now it turns into a green candle that prints higher and takes out these highs, and that's the kind of price action we want in terms of the trapping of the shorts. We did have NVIDIA pulled back to the 205.80 level, so that might not help. And honestly, this is probably for me this is probably all I'm going to do for the rest of the day is this trade, see how this plays out, and then probably call it, because try to lock in a little bit of a profit. If it's 500 bucks, if it's 700 bucks, if it's 1,000, whatever, just try to lock in a little bit of a profit and then see if it can go and become a runner. And then just try to completely be calm and patient and stay out unless something really screams at me. I mean, the thing that's screaming at me right now are the bonds. And the only question I have is, is it just part of the rotation? So now that they've sold off to a degree, again, does that help in terms of a reload on the equity side? Because they're then taking that cash and rotating it into equities, and I get more fearful that the equities would respond negatively, but that doesn't mean they will. Yeah. Right. But it seems like it's an ouch moment, but it's like, because it's kind of, we've had a lot of time to digest it, it might be something that the market digests just fine, and that they just still need to own assets to fight any inflationary pressures. So it to me, it becomes a little bit counterintuitive, but it's an emphasis of how oftentimes if I'm formulating an opinion on something and I'm trading on that, if you're too stuck on that opinion, you get run over, because you can't give it up, right? You can't just decide, oh, well, I guess I'm wrong and I should go the other way with it. Instead, you tend to want to add to your loser, keep fading the move. You keep thinking each time it's a false breakout. Believe me, I mean, I've done it so many times that maybe now I'm finally starting to learn something in my trading psychology, that hey, if this thing were supposed to have rejected and moved lower, wouldn't I have gotten stopped at 36 3/4, right? So now I got this print. It closed at 45.5. So my rules tell me to protect a little more of my profit. So to me, the controlling bar would be this one right here. The low of that bar is 42. So I'm putting my stop up to 41.25. And we want to see again, like this could be a really, really good move if they blow through this 320 level and the NQ. It could go, measured move, right? So from 65 to 15 was like a 250 point move. So if this low is 250, just a measured move in the NQ could get it up to that 500 level. And then the more they start to squeeze it, the more likely it is it draws in new buyers. It draws in additional short covering. They target more and more buy stops. And then you could have something that actually starts to make an even bigger move, as if this is like a third wave, right? So let's say let's say just on today's 15-minute chart, if this is wave 1 and this is wave 2, wave 3 sometimes can be 2 or 3 times the size of wave 1. Okay, so, or we can start measuring it from down here, right? Like if this was wave 1, wave 2, wave 3, you start to see that from 410 to 050 or so, as a 640 point move. Okay, if you measure it from here, 714, 640 points would be 29,350, right? So we're almost there on a measured move. But if this is wave 3 can often be, say, twice as big. So what if this wave 3 becomes, instead of a 450 point move, what if it's 900 points? So it goes from 28.7 to 29.6, and then you see how that it starts all making sense in terms of where these moves can go, how far they can squeeze. Look, we're just barely testing this resistance level. There's no coincidence that this support was the exact level of where we are right now on the 50-day, and where that, it's like, so anyway, 41.25 is my stop. We have 6 minutes until the close of this 15-minute candle. And we have the buyers trying to come back in on NVIDIA. And now when you're looking at, say, places to cover, it should be that this is good resistance here. But also, if this becomes the sort of doji candle that traps and reverses and everyone starts going long again or piling back in, then on the ES, you've got not only yesterday's high, but you also have a retake or reclaim of the 5-day moving average, the 13-day moving average. So if we start going through those levels pretty easily, then you know that the buying is real and they're coming back in here. And it's, likely not to be just a one-touch fade, it's likely to be more of a couple days, you know, maybe they buy it into the end of the week and close with a green week since we had a red week last week. And look at that, on last week's candle, on the NQ, we were down almost 4% last week. Okay, so if you come back in this week and the buyers start coming in and then they start reclaiming some of the stuff, you could put in just a nice 2-bar reversal candle on the weekly and have, you know, and it could just sort of all be like short covering ahead of the Fed announcement. But you can have a nice 2-bar reversal that leads to another sort of bigger wave higher. On the ES, we only got, last week's candle was minus 1.5%. So the close of this candle, I mean, we have 3 more minutes to close. Guess what the shorts are thinking right now? They're like, shit, we broke again. This candle could still expand to the upside. Do I want to start covering here, or do I want to cover at 55, you know, 10 points higher? If it goes through 55, it could get to 65 pretty quickly too. So this is sort of the question mark, is sometimes what they do is they start coming in with volume towards the close of the 15-minute bar and then on the reopen of the next 15-minute bar. So we're kind of in summertime, you know, now lunchtime mode. We rejected this level down here. The buyers came back in. Now we're putting in a nice little sideways kind of bull flag, testing the support that was resistance. And now do the machines come back in with a minute and 40 seconds here? Do they just start squeezing it straight back up, you know, or do they stop me out? And so I don't care. I'm going to just leave it because I'm following like a disciplined rule set in terms of how I move my stops. And oftentimes it just stops me out and it's a shakeout. And I'm like, why did I do that? Right. But it's the only way for me personally to control my emotions on it. And one of the worst things for me is to have a loser become a winning trade, become a loser. But even if you have a winning trade that you could have made, you know, a decent amount of little dough on, and then it becomes a break even, that's painful too, you know. Look at that. That is interesting. So NQ got up through, it traded 324 3/4 and then rejected. But if you're looking at the volume on that candle, I mean, it's a little higher, but it's not that high. So this could easily be something that traps people thinking that that's a false breakout. And it sort of is a false breakout, but it's also like a small indicator of a potential continuation pattern, right? Because as long as it makes a higher print, then the uptrend is still technically intact. I mean, that's the way I read it. So look, they printed the bar pretty close to its high, and now they're expanding it upwards. And what do you think their target is? It's yesterday's high, 52. Let's see if we can get through these and if they really start to move. Okay. And probably for me, I'm pretty ready for a break. This is like watching paint dry compared to what we're used to, right? But it's also, it's almost, I almost enjoy it a little more not having to deal with such wild price action. It almost helps me, yeah, just continue to maintain a better focus of talking through these things and understanding what I'm trying to do with my trading, what I'm trying to see for confirmations and so on and so forth, and how I react to that. When it's really, really fast, it's hard to do the same kind of thing because not only is it really fast, but it's also like the spread has widened so much that it's hard to even use stops because they're just algo hunting those stops. They're just taking liquidity on both sides of every little turn, So in a way, this is kind of a welcomed day here to just calm down, let the trades come to you. Follow the rules even on the profitable ones, because the reality is you never know when someone's going to come in with a market order on either side, and that has nothing to do with the predictability or the outcome or the long-term probabilities of your trades. What we hope to happen is if you're long here, you hope to have something come out from the president or whatever, or some buy market sweep where they sweep you on up to a profit target that you have, right? So I should really have a target in here. And I was saying maybe we get an expansion through, or if we ignore the overnight, maybe our expansion gets us back up to this R2 is 79 and a quarter. Let's see what else we have. 75. Above that, we have 75, 93 and a half is our weekly R1. And look at where that also corresponds to is last month's opening print, 75.95. So, it could be sort of a magnet up into those areas. So I might sort of try one right below that R2 level of 79 and a quarter. So that would be, let maybe put it at, what was my entry? 33 and a quarter. How about about 77 and a quarter? And then what's beautiful about Niels's platform here, this is the trader platform. I mean, I don't know if other platforms have this feature or not, but what's cool is he has a setting, a box that you can click where basically it cancels all orders upon flattening. And that's a really neat tool because if you want, you can put these orders in way away from the market. I mean, what if some really big news came out, and instead of trying to sell it there, you wanted to see if it took out the all-time highs, and you just wanted to throw an order way in here like 76.93 or 7700 or something. Like, we can do that, you know. Maybe that's a better thing to do, right? Just go, oh, maybe we make all-time highs. Maybe there's some big news that comes out. 76.93 and a quarter. And I just walk away, and yeah, it's sort of stupid. But so for me, the rule set though goes like this. Now what I'm trying to do is let this trade move 34 points in my favor. So if it does get to 67 area, I want to move my stop again to basically capture 30 points or so. So if it gets to the 34 points of profit area, I'm just looking for, is there another level that I can use, you know, the way the candles are forming and so on, that allows me to move my stop up to a point where I feel like that's an actual meaningful level to have my stop in, right? So it's just a scenario where I'm trying to say, look, the trade is going my way. How can I give myself some room to stay in the trade, but also allow it still some time to continue to play out here, right? Because again, these levels, if the sellers do not come in here, then it's not resistance, right? It's resistance because we've defined it as a level that should provide resistance. But if the sellers just put their hands in their pockets, then it's going to blast right through. So we're trading 50 right now. We could see that 67 print in a minute. I mean, now you're through the 320 level on the NQ, and will it hold, right? Will they start coming in? Because they don't always trade off these pullbacks. They often have these moments where it's a matter of, okay, we've reclaimed, now we have to put our money back to work again. If they don't, they get their asses handed to them by their managers for, hey, why aren't you long the market? We just, you know, I don't know. I'm just, guys like David and I think maybe Manny had worked on some, you know, they were on some institutional desks and stuff for periods of time during their careers. They could probably talk a lot more about that kind of stuff. But that's just the way I sort of interpret it. And it helps me formulate kind of what do we want to do with some of this stuff. So you can see right now the market's making a new high and NVIDIA is trading down. It just went the other way. So do they shake out the NVIDIA players here, and does it actually start catching up and moving higher? Or does this become the false breakout of the 50-day on the NQ and it moves the other way? I tend to think we'll see a continuation here, but anything can happen. So, okay, guys, do you have any other questions or thoughts or anything before I kind of sign off on the live cast here in the pit? I'm glad to address anything you'd like, or you know, anytime anyone wants to talk, I'm here to help if I can. And I know I'm kind of like, I can talk and talk and talk about this stuff. So, but I'll go ahead and good. Hopefully it keeps paying for us, right? Um, I'll go ahead and post my links to my room and stuff, and my website, and you can learn a little more um, about me and stuff there, and join my room if you want or not. No big deal. But um, we're also here to help with, you know, uh, Pitbull trading accounts, and if you want to try trading a prop firm account. I've done that quite a bit and can at least help with the setup. I can help with some different ideas of how the prop firms, you know, you sort of have to adapt to your style to the trading rules for Pitbull or for anyone else you're trading on. But Pitbull, I've used enough of them that the rules that we have at Pitbull, and I'm not a part of the firm at all, but I am an affiliate. So if you sign up an account using my link, I get a little credit for it for being an affiliate. But the thing I wanted to say about it is the rules are pretty good for Pitbull. I mean, I've traded a lot of others where the rules are quite hard, right? And so I think that the rules that Pitbull traders have set up are pretty awesome, pretty good. You know, as far as prop firms go. So anyway, I'll kind of leave it at that. And hope you guys have a great rest of your day. And I'll be around for a little longer, so I'll probably leave my screen up for a while, even though I'm gonna get off the webcast here. So, but appreciate you all, and we'll look forward to the next time. All right, cheers, everybody.